All of them, none of them was bearish. Not even a single one was bearish. Okay. So you can try to decode based on the open interest OI. Okay. Based on the simple method. Okay. So the method is quite simple. So you will use this. Okay. Now tell me something. This was the first day, 21st of August, right? So 21st of August was the first day of the contract, right? When the contract was getting formed. Now, when the contract was getting formed, this was the high, this was the low, right? The very first day. Okay. Now, on the very next day, on the very next day, okay, there was an inventory, no doubt. There was an inventory. And was this also a bullish indication?
Yeah, it closed above. Yeah.
Okay. Now let's see. On this day, all these yellows are inventory days, right? All these yellows are inventory days. Okay. This inventory day, was there a bullish indication? There was, right? There
Yes,
is a
yes,
bullish
yes.
indication on the inventory day. When
Yeah.
there is a bullish indication, the price was 47.63.
Mm.
It jumped 200 rupees by the next inventory.
Yeah.
Again, bullish indication on an inventory day. By the time the next inventory came, the price was 49.26. It came to 48.84. But in between, it moved about 200 rupees or so, roughly, maybe 100 rupees or so. Okay. There was no indication here. If you look at it, there was absolutely no indication. It was a sideways. The next inventory day, there was some sort of a indication, right? It is a bullish indication, right? Now, if it is a bullish indication, what is the current price? Roughly 5100, right? Okay. So it was 5000. From 5000, it went to almost 5100, right? In between, it came to 5000, 5050, whatever. Okay. And it went to 5100. Okay. Indications on an important day will be always very helpful for us to figure out what's going on. Okay. Now, tell me something. When this contract got active on this particular day, the contract got active, right, on 21st of August. There was no July, right? There was absolutely no July. The close on this day was how much? 4582. What was the magical number above this? 4600. And what was the magical number below this? 4500, right? Okay. So it started moving up. So it broke out the magical level of 4600. Okay. And after it broke out 4600, it also gave you a bullish indication. Correct? So the price from 4700 or so is expiring at around 5000 level, which is 300 rupees. roughly. Okay. So see, as I told you, in case of commodities, okay, every commodity will behave uh, slightly differently. Okay. Now, in case of crude, which is one of the most liquid this thing, and it is loved by traders. Okay, people make big money in this. Okay, the movements in the crude oil, okay, will be more or less in this particular pattern. Now, let's come to this thing, and 20, which was, what was the day? 22nd was the day when this contract came into existence, right? Yes. Okay, so 22nd, so this was the day, right? It started breaking low for the first time over here, if you look at it, right? So this was the day when it got volatile, right? If if we see, this was the day when it got volatile, okay? And after that, it started breaking low. It broke the low and it went up. Now, the interesting fact over here is, do you see low volatility here? Correct. After this low volatility, after the contract got came into existence, okay, this is low volatility. This is a compressed candle, right, on 27th. Okay. Now, on 27th of August, it is a compressed candle on a full day. There was no holiday on this day. Okay. So it finally broke out on the upside. Do we see something? Okay. On this particular day, do you see there is an inside candle? Low volatile day. There's not much of movement, right? 31st of August. Do you see this? Is it acting as a support and a resistance, sort of? Correct? Okay. Now, over here, we see that, okay, it broke out, correct? Once it broke out, it also again started forming support from here and it started breaking the highs, right? Like you see that it broke on the upside. So the trend started going up. It came for a support closer to this level, the same level, this level, and it started building support over here because crude was least volatile on this day. Thereafter, on this day, because it was neither breaking the high nor the low, nothing, right? So during this entire contract, active contract month, these were the 2 days when the volatility was minimum, correct? It was minimum in case of crude, right? So it was the least volatile on these days. Okay. Thereafter, it tried breaking on one side. Once it broke on one side, like one specific side, it came for some support, etc. After that, it tried again breaking out, and it seems that it is trying to do it because after this, if you look at it, Okay, this particular day, if we see this high is 5009. Okay, this closes 5012, right? But this was a high volatile candle, and this particular candle, if you look at it, is closing at around 5012 again. Okay, so some sort of relationship on the least on the low volatile candles will also be found in case of crude oil. Okay, now let's see. When was this low volatile candle formed? On 27th of August, correct? So on 27th of August, it was here. After that, what was the indication? What was the indication after
Bullish.
27th? And before 27th of August, what was the indication?
Bullish.
Got it? Okay. That there were some sort of evidences which were available. Okay. Now, um, if we look at one second. Okay, we need to list whatever we have talked about as far as the artifacts are concerned. Okay, so we need to create a list. Okay, so let's do that. Let me take a 5 minutes break. Okay, you guys also take a 5 minutes break. Okay, we will resume at around 8:40 or so. Okay, then let's first list down these artifacts and then we'll move forward.
So I had a small question.
Hmm. Good.
This inside body speeds also works for stocks as well, right?
Hmm. For stocks also over there, you will read delivery volume breakout.
Okay.
All right, friends. Apologies. All of you back?
Yes, sir.
Okay. All right. So point number one is contract active. Okay. Once the contract is active, you can read the open interest analysis. Okay. So once the contract is active, only after that you do the OI analysis. Okay, that will be accurate because the entire liquidity will come in that contract. Don't try to implement it in the futures, like the next month or the far end contracts. Okay, so that is point number one. Point number two is inventory. Inventory day activity. Okay, on this day, please do an OI analysis and see what's going on. Okay. Then the third thing is you'll have to find a low volatile day, okay, preceding OI analysis and post OI analysis. Okay, this means that before the low volatile day, what was the indication of the OI analysis, and after the low volatile day, what is the OI analysis? Okay, so say for example, if you look at it, this day was the low volatile day, so it was the 27th of August. Okay, and please remember all these should be full days. Okay, it should not be that it traded only the half day and all that. Okay, so these should be full trading days. Now, so on 27th it happened. So when it happened on 27th, it happened here. So before 27th there was a bullish indication, and after 27th there is a bullish indication. Okay, so the same way, if it is bearish indications, then we would like to go short. Okay, now please remember that in case of crude, from an India time perspective, okay, from the India time perspective, after 1:30 is the most important time. Okay, that is because the London exchange will start operating at roughly around 1:30 India time in the afternoon. Okay, so don't think that you have to jump to trade at 10 o'clock in the morning. Okay, there's no need. There's absolutely no need. Okay, you have to basically try and build positions after say around 1:30. Let the London exchange at least open. Okay, after that you can start operating in the commodities market. So all your position building should happen only after 1 p.m. Should not happen at 10 o'clock in the morning. Is this clear? Okay. So the most active time in any of the internationally linked this thing commodities would be after 1:30. So from 1:30 to around 11ish, that is the time when you should be operating. Don't operate before that. Okay. And the best part is by 130 roughly your equity is also over roughly. Okay, so that will also help. Now, so this is also important. Trade only after 1:30 p.m. Don't do it before that because the London exchange is not active. So don't worry if the price is going up. Most likely it will come down if post 1:30. Now, let's try and stock this. Okay, and you will see a very important pattern here. Um, when did it go active? On 22nd, right? 21st. So this was the day, right? So on 21st, this contract became active, and this was the high. On this day, it opened in the evening anyway, so it went up. All right. Now on this particular day, the high was here, but always try to avoid a day which is not operating the full day because you don't know actually what happened in the morning. Okay, so that's the reason. All right. Now let's look at this day. It's opening above, staying above. Okay, fine, no problem. Low volatile candle. Okay, now this is important. On this particular day, do you see that crude oil failed a level, right? Over here and also here. Am I right? Correct? It failed a level. See, it opened somewhere here, wherever. It tried breaking the high and then it came and closed inside, right? So what does this mean? Did it build resistance here? At these levels, are there resistances? Yes or no? Okay. This is a level formation in case of crude. All right. So these are level formations. All right. So when it has hit a level and it fails a level, okay, this level has an importance now. And if you look at it, this was the level which was taken out. All right. Let's look at this day. The highs are getting broken. Again, a low volatile day. Okay, now this is important. It opened below and it went up. Is this a bullish engulfing? Yes, no, maybe.
Yes, sir.
Okay, so there's a bullish engulfing. Okay. On this day, is this an important activity? It tried going up and it went back. By the end of the day, it closed inside, right? Is it a level formation like we did here? Yes or no?
Hmm. Yes.
Okay, so this is a level formation if you look at it. Okay, now it will either try to go up or will try to go down, right? So when the level formation has happened, which side is it trying to break? Is it trying to break the lows? Like it started to break highs here. Did it start breaking the lows? Okay. And from here, did it go to the previous support level or whatever was done? Okay. Now, over here, do you see the reverse thing happening? It went down and it closed above, right? Yes or no?
Yeah, correct.
Now at this place,
Move to the,
there is a kind of a level formation here.
yeah,
So there's a level formation here. Now after this level is formed, it will either start breaking the highs or will start breaking the lows, correct?
yeah,
It seems to be breaking highs,
yes,
went up till the
yeah,
previous
correct.
level. Okay. Now after this, let's see. This seems to be a level. It went down and kind of recovered. So there's a level formation here. When the level formation happened, after that it started breaking what? Highs, right? Did it go up?
But,
Or
but that was a level failure, right, sir? Saying in 17.
because this was a high volatile, this thing. This is actually a high volatile. Okay.
The next
So
day, no, it created actually a level, no, the next day.
so there is a failure of level. Which side is it breaking? After
Side.
after the level formation happens, a say a support or basically a significant level happens. Okay, like we do in our equity. Okay, so after the significant level have been created, see there is a significant level here. You can call this, and there is a significant level here also, right? So it went below this, and then it went above this, and it closed here, right? So in between this and this, there's a significant level, right? Okay,
Yeah, correct.
right. And after that, it started breaking the high. So what comes to my mind is that